All right, recording is up and rolling. I'm gonna go ahead and get it started. Thank you guys for popping out today on a Tuesday night. Just looking at a lot today. A lot of institutional analysis. We're gonna be going through setups. That's normally what we do on Tuesdays. Our behavior for the week, what we're looking for the week. We're gonna be looking over XAU. We're gonna be looking over some ETH, and then we're gonna be looking over US30, maybe a couple other indices as well, possibly NAS to see certain setups as well as possible direction into the week. So we're going to go ahead and get this started here, but before we begin, I just want to iterate again that behavior is going to be the most important part to your analysis when you are studying these institutional concepts. If you understand how the candles move, how they print, why they print, it's going to help you so much in your confidence, in your ability to hold trades for longer, and your ability to hold to the take profit and not just take profit based off of your dollar amount, right, or however much you are up. But it's going to start to teach you to then trade the chart. So I want to go ahead and get into XAU. We talked about these trades here on our last stream, but I kind of want to get into these trades again and talk about what trade I would prefer over the other and what trades you can look for as well. So just back testing, right? Looking through past previous shorts, what they provided, why they provided, and what you want to see. Right? Because a lot of the times within institutional analysis, I talk about continuation. Instead of trying to catch these bottoms, right? Those springs at the bottom, it would be a lot easier to catch that reaccumulation, that break a structure upside here, and then I can look to enter here and target higher overall, right? Over trying to catch this bottom right here because it might risk more on a larger demand zone, or I might get into situations where I'm like, okay, that's the spring. I'm going to take it to the upside, and all of a sudden it just raids liquidity to the upside and then breaks down, and I'm stopped out of my trade, constantly trying to find that spring, right? So I'm just logging every bottom possible, and then all of a sudden my portfolio is blown because I'm not utilizing what we are looking for on a higher time frame scale to a lower time frame scale when we do top-down analysis. So we're going to get into these trades here. We'll talk a little bit about time efficiency as well, how time is money, what it means, why it works, and how we can wait for situations like this where we're catching continuation trades instead of trying to catch the absolute top up here, right? Because we have situations to where if I tried to catch the absolute top over here, just to say it out, right, I took a short, maybe off of this zone. The amount of profitability I made to this demand zone was a 17-1. Is that a bad trade? No, it's a really good trade still. But what's the difference between this 17-1 and then what we have underneath it? Waiting for confirmation of double breaks of structures to the downside, the M's to form at 229. So you can greatly profit much more just by waiting for the continuation over trying to catch those bottoms and those tops. But let's go ahead and talk about this and how I'm talking about that, why I mean that as far as trying not to catch bottoms and tops and over continuations, right? So within this certain trade right here, just to reiterate what had happened on this trade, we'll go back. Your hourly break is structured to the downside. We had a double BOS right here, one here, and then the second one is right here. Here's your institutional candle that had caused that break of structure to the downside internally. So now we're looking for price to come back up into that area. I'll go in the 15 minutes so you can see exactly what candle I had marked. This institutional candle here, and then the top of this wick as well. This was the highest high that caused this lowest low right here. If this is held and this low doesn't cause a new high here, I can see this low taken out as well as all the equal lows that we are forming down below, right? So let's just kind of play it out a little bit, put out a few candles, we'll understand the behavior. Within this area, we see a liquidity rate to the downside right here. So we see a break of structure to the upside as well. There's a fair value gap within this area. We could have looked to take trades on and take it up into this area right here. This is what I like to do when I backtest, and I backtest these higher time frame plays, because when I go back, I can say, well, the narrative was starting to form. Now I can get into long trades to the upside to take it up into this area and then start to bring it down. And I start to learn the behavior of how these schematics present themselves and how I can get into trades on both ends, right? So within a certain trade right here, just to reiterate what had happened, price was coming up into these areas. We see that break of structure here, demand candle right here. We could have looked to take it on that move up just to show you guys exactly what candle that was. 5-minute double breaker structure. Here's your first one right here. Second one proceeds right here with this candle. Candle before lies right here. Could have looked to take buys up into this area right here. Let's go ahead and play it out some more. As it's coming into that area, we want to see price keep equal lows and start to manipulate highs as it comes into these areas right here. We start to see it creating those equal lows, keeping those equal highs. Let me go ahead and throw my session times as well so you guys can see what I was looking for. I was looking for a Tokyo raid to the upside within premium, within this supply zone. And then I was looking for a lower time frame. I believe it was a 5-second breaker structure to the downside when I took this trade. After the Tokyo highs were ran within London, we'll go ahead and play it out some more. We can see Tokyo manipulating highs as well, creating that zone. Once London opens, I was looking for those highs to get ran. London had opened. I want to go ahead and show you guys that as well because I do have it hidden. Apologies for that. But you can see when London opened, we ran the previous Tokyo highs right here. So I ended up taking that trade to the upside right here, targeting these lows below here and lower into this area of fair value. But let's talk about the amount of profitability I could have received on this trade at the top versus this trade down here. That was the continuation. After the break of structure of the range, we had an accumulation to then distribution, and that was your most confirmed trade on that move to the downside there. I'm going to go ahead and throw off these market sessions now, and we'll talk about the move to the downside. So we saw that move to the downside. We had an hourly fair value gap after the institutional candle supply creation. We'll show the hourly to show you exactly what fair value gap I'm talking about. This hourly imbalance right here. 1, 2, 3 candle, your entry is right there. 50% of the fair value gap. Another entry presented itself. We talked about the 3-minute fair value gap as well. That presented itself right after that first break of structure to the downside. See 1, 2, 3 imbalance right here between here. Stops over this high of this candle right here, looking to take it lower. Multiple entries are going to present themselves with the continuation. That's one of the most beautiful things about institutional analysis, because you will have at least 3 to 4 to 5 entries on the same higher time frame leg on lower time frames if you are looking to take those. I even showed you guys the hourly one. That's 3 trades within just here that we can look to take, right? Or we could wait for the entire range break to have full confirmation, and we can look to take those 5-second to 1-second trades or those 1-minute trades on lower time frames when we get into these areas right here. But let me go ahead and play it out some more. We'll talk about what had happened. I was looking for accumulation to then distribution. That's exactly what had played out. I'm going to go back on a higher time frame so we can let this play out a little bit more. Let's talk about the behavior as we're coming down to these areas as well. And let's talk about what had happened around here. So as institutional traders, as with that mindset, we understand that news popping out at 8:30 every single morning during certain CPI, PI days, right? FOMC. During these days, news is going to be the catalyst for a setup that is already in place. So as an institutional trader, I already have my narrative. I already have my setup, and I'm waiting for that fuel, the catalyst, to then enter that trade to take it to the downside. The news is going to now get retailed to sway bias. They're going to get rated with liquidity, and then they're going to pick one side, and then that side is going to get ran. And we'll talk about what had happened as well. So on this day, actually, I believe it was unemployment news. And the unemployment news, just to tell you guys before this even happens, before I even watch what happens right here, was good. Was 3.5%, where that was a good news drop. Nothing was wrong about that. So what had happened then? And we'll talk about exactly what happens at that 8:30 price on Friday. So I'm going to go ahead and mark that out. That 8:30 price, right, on Friday, looking for a distribution as well. Accumulation to then distribution after we raid some highs, and we'll talk about where the setup presented itself as well. So I'm going to go ahead and play it out. We get that break of structure to the downside. We now have that area of supply we can look for price to come into on that 8:30 news drop. So we already have a double breaker structure to the downside. We're already coming out of the range. The market structure is telling me down, and the liquidity is telling me down, right? So why are we looking to take buys based off of news? So we'll watch as price comes into these areas, and then we'll watch what happens after. So one, we have an entry right here, and we'll talk about what happens. Let's watch 8:30. There's the 8:30 volatility. Let me go on the 5-minute as well to show you guys what had happened. I'll bring it back. We'll do a little bit more of replay mode right here, if it will let me. Okay, here we go. But we'll play out a few candles. Watch what happens when that 8:30 hits. We get a large candle to the downside. And we have to remember on the 1-minute, on the 2-minute, once that happens, what is retail doing? They're shorting to the downside on that large candle that we had received, right? So where are they going to place their stop losses once that candle goes down like that? Maybe they shorted here. Maybe they shorted down here. Wherever it was, they're going to be placing their stop losses right here. Or maybe even right here, right? At this candle or at this candle or at this candle. We have a supply zone we're looking for. Notice how price came down and then the candle directly after tapped into our area of interest that we had marked out before the news catalyst had even hit. Once 8:30 hit, we wait for that catalyst to then come into play. We get that break of structure to the downside, and then on the hourly time frame, actually I think this was the 15-minute time frame I was looking for at the time. I'll play one more candle out. We had a fair value gap that had presented itself. So once that fair value gap had presented itself, after the large displacement to the downside, so again, another short opportunity that presented itself right here. If we didn't take this short, we can wait for the confirmation. Here's more confirmation. Here's an area of fair value, looking for accumulation to then distribution yet again. Large move. After we have the down move, what does this do? This scares people out of their shorts. Whoever got in shorts down here, down here, down here, or down here on the large move to the downside are now getting scared out of their shorts. So they're either longing or they are closing their short positions when all we see is that displacement to the downside, area of fair value. We can see on lower time frames, the lower time frame supply as well that we are coming up to mitigate, and we will talk about what happens right here. So price starts to come up, it starts to come down. We're looking for an accumulation to then distribution, so a manipulation of lows while we leave highs, to then a distribution, a manipulation of highs while we leave lows. So we'll look for either trendline liquidity, equal lows, and we'll look for an area to take it once it comes into play. We talked about that 8:30 candle. Now let's see what happens when we come into that PM session following. Price is coming up, creating those equal lows yet again. Creating that trendline liquidity, manipulating highs, taking out highs. What do you think everybody is doing at this point in time? Trying to long, trying to long, trying to long. Maybe they see that large move to the downside. They're like, news, whatever it is. And then they look at this trade on the, maybe even the 5-minute, and they say breakout to the upside. Maybe they had a trend line drawn, something similar, and they're all buying right here, placing their stop losses right here, right here, right here, and right here. Right? Because they don't want to be wrong. And let's talk about what happens once we come into that area. I'm going to go ahead and go to the 1-minute now because we have that full confirmation. So we're waiting for price to come into premium. And then once it shows that, we're waiting for the LTF break of structure to the downside. And then we're entering our trade, holding for longer. So we'll go ahead and play it out some more. As it starts to come up, and I'm going to just play these candles out, we see one move to the upside. I started to see what I thought was a 3 drives distribution. If it shows me the 15, yes, perfect, okay. 15-second chart, don't get discouraged. It's the same behavior on literally the 1 second. On even the 1 second, if I were to go like this, it's the same behavior you will see on the 1-minute, on the weekly. Price is fractal. It's going to show the same moves from time frame to time frame. So once we get that down in our heads as well, it's going to help us with taking those lower time frame confirmed entries when getting to areas of interest. So I'm going to go ahead and go back on the lower time frames here, back on the 15-second. I saw one move to the upside. I saw a possible break of structure to the downside. We're still not coming up to mitigate that 50% like I was looking for. And then we see another push up. So I said, okay, one push up, 2 push up, And I was looking for a third push to the upside to complete that 3 drives distribution, the behavior of the distribution as we are in an area of premium after we have broken structure to the downside with displacement, filling areas of fair value, and watching the behavior as we are coming into our zones. So let's go ahead and play it out some more. Comes up, comes down, right? We have 1, 2, and we're looking for the third, for it to take out this high, fill that 50% of that fair value gap. And on behavior of a liquidity rate to the upside and a move to the downside, I'm going to go ahead and show the 5 seconds because that's where I ended up entering. I'm looking for trades. I'm looking for that institutional candle as we come up into that area. We raid the high, and then we have a move to the downside. If I show the 1 second, we can see that break of structure to the downside with displacement. 1 here, 2nd here, area of supply right here. Fair value gap as well. Same exact behavior on all of these charts. I'm showing a 1 second chart right now, but it's the same exact thing as the daily chart, the same exact thing as the weekly chart, the same exact thing as the monthly chart. Same behavior. So don't be discouraged when you're on these lower time frames. And your heart starts beating, right? Because it's the same exact behavior over and over again. But let's go ahead and play out a few more candles. We see that move to the downside here. I wasn't in the trade yet. This is when I picked the institutional candle, the supply zone to look to take it off of. We can see one move here, another move here, a redistribution, a drop, base drop, right? Within this area after we filled the 50% of the fair value gap, after we broke structure of the range with displacement, we can now look to enter these trades. So we'll play out a few more candles. I'll go back to the 15 second here. You have your institutional candle. Price starts to come up. It taps into that institutional candle, and people are looking for a reaccumulation right here if they're on the lower time frames like this, still trying to take it higher even though it's within premium. Now we can see those equal lows that are starting to be formed. We're looking for an accumulation to then distribution on lower time frames. Let's play out a few more candles. We get that distribution. Now we have that double break of structure to the downside. We had 1 here, 2nd one here. Area of fair value, area of supply as well. Let's play out a few more candles. Now that everything has started to come together, we talked about the 4 hour going bearish, we talked about the 1 hour, the 15, and now we are waiting for the 5 second. Once we come into this area, price is ready to make the whole move now. Price is ready to target now those overall lows, this weak low right here, and then fill that imbalance. So let's now play this trade out. I'm going to go back to the 1 minute chart and watch what happens. Now that had happened and I waited for that 5 second structure to hit, now I have the full confirmation of the trade. I'm looking for another accumulation to then distribution, more creation of supply. You can see that's exactly what we do. And we'll talk about areas we could have gotten in here too. Where's your next minute break of structure to the downside after switching bullish, after rating liquidity? We had an accumulation. Price showed bullish minute structure right here. We can see this. Created that higher high. And then we see a lower high and then a lower low. There's that M. There's that M we are looking for. So where's the next supply zone after the double break of structure, the internal break of structure to the downside here? Again, candle before. More entries. We just showed 6 entries on the same leg to the downside, right? If I didn't want to catch this right here, I could have caught this right here. It's completely fine as well. We'll go ahead and play it out some more. I'll go to a higher time frame chart now. 5 minute chart. And then we see that entire move. We break range again, looking for another accumulation to then distribution after coming to areas of supply. This is the area of supply that broke this high that had, or this low that had caused this new high right here. So another area we could look to enter on. And now that price has made that move, we see the final continuation to then downside following. Now let's talk about what had happened before, okay? Within this area, that trade that we saw on the 5 second to 15 second pulled the 99 to 1. Is that a bad trade? No. This trade we saw over here after full confirmation pulled a 112 to 1. Let's talk about the time that this happened as well. So down at these lows, we'll actually wait till these lows hit. There's the lows. There's the TPs for how these go. This actually isn't even all the way out. There it is, a 1 to 14. But let's talk about the time efficiency. If I caught the top over here, shouldn't I be profiting more than this trade right here? Not necessarily, because this trade allowed me more profits than this trade did just based on that waiting for that confirmation. Now let's bring it out in time as well. If I caught it up here and tried to hold it to these lows, one, I'm holding over the weekend, Friday, Saturday, Sunday, so I'm taking swap fees. And then once price hit that, 4 days, 18 hours, and 45 minutes. Is that a bad trade to hit a 99 to 1? No. I mean, I would hold for 4 days, right? But let's talk about this one now. Let's bring this back. I was able to profit 10 R more, roughly, 10 to 11 R more in a day, less than I was on this move right here. Immediately green on this trade to the downside, holding for less time than I was over here. That's what I talk about with time inefficiency. I was able to hold for less time and make more money on this trade right here than I was on this one over here. But I caught the top, right? That's why I say it doesn't matter. Who cares if you caught the top? Who cares if you caught the bottom? Because if you can catch these continuation trades on lower time frames, you're going to be able to profit more and see if you are right or wrong much quicker, which will help you learn much quicker as well than waiting, right? Or trying to catch this top right here and then getting discouraged when these highs are rated and then it U-tads and then breaks to the downside because you weren't shorting on confirmation. You're just trying to catch that top, right? That U-tad, that spring, whatever it is. Something funny that MentFX talks about is the amount of people that are bearish, right? We talked about how many people that were, bullish on this chart at these areas right here after this move to the downside. How many people were bullish after they saw this move to the upside right here? And instead of looking for supply, they saw a large move to the upside and they said demand right here. They said demand right here. I'm going to buy off of this candle right here. Right? They said demand right here. Another reaccumulation. I'm going to buy off this candle right here. And then now all of a sudden, everyone who is trying to buy is the reason, as they're placing their stop losses under these lows, these lows, these lows, is the reason that price continues to the downside after it already showed that bearish nature. Now that the liquidity is present, now that they are longing, putting their stops underneath these lows, we see price react off of those zones. That gets them happy. Maybe they add some more positions in, some more money in, put their stop losses underneath these lows and say, I caught the bottom. I'm going to hold all the way to 1970. This is still a bullish chart, right? Whatever they're telling themselves to be able to hold that trade. But us as institutional traders understand that these lows were taken out. Price came back up into supply instead, and was mitigating supply, breaking structure to the downside, creating new supply instead of that demand. All of this demand is straight retail liquidity. That's all I'm going to tell you as far as how these charts precede themselves, right? All it was a lower low, a lower high, continuation to the downside overall. We'll go ahead and show that. Lower low, lower high, continuation to the downside. That was it on a higher time frame scale. But they don't want that. They want that lower low, bottom, and then moon. They want that V bottom, right? They want the spring, which is why MentFX talks about that. He says, every one of your mentors or people who are out there trying to teach you just buying off of certain zones or just selling off of certain zones because they have them there is literally the reason that charts move, right? Is the reason that charts move to the downside or move to the upside into certain areas of liquidity, because they're sitting there saying, hey, this is demand. I'm going to continuously buy this because I think it's going to go to the upside because I'm looking left, all the way left, right? And it's a higher high, higher low. It's supposed to continue to the upside, right? When in actuality, we have our area of premium and discount on this move here. I'll just show the daily chart. We have our area of premium and discount, and we came up into premium, rated highs, tapped this institutional candle right here that caused an internal low, broke structure to the downside, created supply, broke some more structure, and then we are at the daily structure break right here. Another daily structure break to the downside. So why continuously try to catch the spring, to catch the spring, to catch the spring here, to catch the spring here, to catch the spring here? Because it's not going to work. Once you wait for the confirmation, it will work, and you will be right away, or you will be wrong right away. And you can teach yourself these areas where you can look to buy or sell instead of just guessing on all of these zones, because at the end of the day, that's not going to profit long term. It's going to get you frustrated. It's going to get you emotional. It's going to cause over trading. It's going to cause certain instances where you feel like you have no idea what you're doing. So then all of a sudden you go to the next best thing, right? The next best strategy. And you're like, oh, this ICT dude, he seems like he's hitting it, right? So let me go ahead and try it. But then you just go to the charts and you find every fair value gap possible and try to short and long it. It's the same exact thing. There's no difference. If you're trading Wyckoff, you can go to the charts and say, well, this looks like a distribution, so I'm just going to go ahead and short it, right? When in actuality, all it was a distribution to then accumulation, so a reaccumulation. So stop trying to guess those highs, stop trying to guess those lows, wait for the continuation, wait for the breaks of structures. And for those of you just starting in the space, wait for the entire range break, because now you can confirm that distribution. Now you can confirm that accumulation as accumulation, as it created demand, versus instances where you think it's an accumulation, so you short it, or long it, or you think it's a distribution, so you short it. Instead, wait for that whole range break right here. If I didn't catch this trade right here, right, before the range break, I could have waited for the range break. Where's the candle before the candle that broke structure? Right here, supply zone. There's my next trade. There's my lower time frame confirmation. Oh well, I didn't wait for that. Wait for the double break. Here's the double break. Came back up into that area of supply, another accumulation to distribution. I have another area I could look to short, right? Don't get into these instances where you think it's just going to run away from you, because there are multiple instances, especially on continuation, that you'll be able to get into those trades. I talk about the market being 80% continuations and 20% reversals. And this is very, very true. Just personally from live testing, based off of what Prince of Persia had said, based off of what peers have seen, what they have said, you will see more continuation than you will see reversals. So why are you constantly trying to catch tops and bottoms if that's only 20% of the market? If that's only 20% of the time that the chart is moving? Because now you're going to get into instances to now where you think things are left behind, so you get discouraged. This causes you to overtrade or find another chart, and now all of a sudden you have 20 charts on your screen when you should really be only focusing on 1 or 2 pairs, right? 2 or 3 pairs. I focus on 3 pairs right now. I focus on US 30, I focus on gold, and I focus on ETH. I don't even really focus on ETH that much. I just go and look at ETH for the higher time frame chart. I have yet to trade it for a while, I will not lie. But XAU and US 30, ones I look to trade every single week. Right? Something I can go on the chart and find the narrative to the story, follow the chart, so then it seems like I just cannot miss on that certain trade or that certain chart. It seems like I know exactly what I'm doing. And then you get people coming to you saying, oh, how did you do that? How did you see that? How did that come to play? When all in actuality, you're just following that narrative. You're following the higher time frame narrative. You're using the lower time frame pages that I talk about to make up that higher time frame story. And then you're entering trades and walking away from them. So let's go back to this area right now. So now that we have waited for that whole range break with a huge displacement candle, something very, very obvious, I'll take away this as well, something very obvious on a news day, I can now have another trade. That's okay. That's okay if I didn't wait for this one right here. Or I wanted to wait for this low to get taken out right here. Once that low is taken out, we came right back up into that area of fair value, and then we continued to the downside. I now have multiple entries on this move to the downside that I can still profit off of. And you also don't need to catch these 114 to 1 Rs, especially when you're starting out in the smart money space. A 1 to 5 is good. A 1 to 10 is good. You see funded traders out there with 1 to 2s, 1 to 3 R&R averages making so much money, right? It's the same exact ability. Once you find that area that you're comfortable in, that narrative that you're comfortable in, if you continuously try to hone in on that and look for that setup every single time you come to the charts, then you will profit much more. Because now you're not worried about how much money you're making. You're not worried about how many charts you can find or how many setups you can find. It's just the same 1 or 2 pairs Every single day at the same exact time, you come to the charts and you look for those setups to come into play. Now, let's go ahead and talk about this move right here, how this long entry presented itself and how we could have looked to take this long into this area of supply and then look to short it as well. So we'll go on lower time frames. We're within this area right here. Let's go look left. This was the area that had caused this new high. We saw this imbalance. It actually did not come into the imbalance. No, it did not. It did not come into the imbalance. It came down, filled that over here. We can see that's where it filled it. Now we're looking for a liquidity raid, break a structure to the upside with impulse, double BOS if we want as well. And we can look to take this up into this area of supply, even though it's counter trend. Let's go ahead and play it out. We saw a liquidity raid to the downside. There's the liquidity raid after the fill. Now let's look for the break of structure to the upside. I want to show the 5-minute chart as well. 5-minute means there's going to be an hourly pullback coming into play after. This was a 1-minute chart. 1-minute move to the upside here. We're looking for now this one to be broken, just so you guys can see what type of double BOS I'm looking for, right? That W. Go back to the 1 minute. We'll draw it out. All right, price to come up, price to come down, and price to make that W. That's what we're looking for. I don't know why it went away. All right, that double break of structure, so I now have an area of demand I could look to take this to. We'll play it out a few more. Price makes that move to the upside. We see that break of structure to the upside right here. We have that area of demand on this move right here. We'll show the minute chart as well. Now that we have this area of demand on this double break of structure, we're looking for price to come back down into this area, fill it, and then we can look to take that trade to the upside. Even though it didn't tap right back into it immediately, this is where that demand was introduced. I can show the 15-minute chart as well, so you can see what I am looking at, this impulsive move to the upside right here. We'll go back to the 5-minute, play out a few more candles. You can see we started to create a range at this area, this high that had caused the low. But once we came down to that area of demand to the left that we had talked about that had caused that new high, even though we're bearish still, we had a sweep of the lows into demand. We had 2 breaks of structures to now show that introduction of demand. This is within discount of the entire swing move as well. We could throw on OTE, which is what I'm about to do. From here to here. Settings, where's my template? Here we go. All right, but OTE as well. I'll throw it on the other side. Oh, geez, 1 second. Now that we got it on there. Also in optimal trading entry, is there an imbalance right before the zone? Yes, there is. There's that imbalance. Is there liquidity just before the zone? Let's find out right here. So we get those moves to the downside. Look at this. Equal lows that are being formed. We have equal highs as well. This is where early buyers got into trades and tried to take this to the upside. They said higher high, higher low, continuation to the upside. But this is that liquidity goal internally that price was looking for. Those equal highs right here. We'll play out a few more. We can see that now move to the upside. What is retail doing at this point in time? Trying to take this to the upside, trying to take longs to the upside right here. And then we see after the raid, from this internal high that caused this internal low, we see the delivery into that. All it did was come into the institutional candle, break 1-minute structure to the downside, and now start to continue. Now that it broke that 1-minute structure to the downside, we're looking for the 5-minute area to be filled as well. Now we have an area that we can long and take to equal highs. Look at these relatively equal highs that we have here now. We have an area of supply. Look at the equal highs we have here as well, within the area of supply that had caused this new low overall. So let's play it out. Price comes down into that area. We can look at the 1 minute as well. As it is coming into that area, we can look at the 15-second, maybe even the 5-second. Play out a few more candles. It starts to show exactly what we're looking for. How it's leaving highs, manipulating lows. We have 1, 2, 3 moves into it, gets people into shorts. They're trying to take this to the downside now that they have seen this large move to the downside. And then what happens following? Your first area to look to take this would have been this high right here. Then you could have looked to target this area as well. But we play this out, and then we get that move all the way to the upside. Price reaccumulates all the way into that zone right away. And now you have that area. You are out of your trade, and you can now look to take this to the downside. Because what were we looking for before? This Monday low to be taken out at these lows down here, these H4 equal lows that we have. Area of distribution. After a break of structure to the downside, we're looking for a reaccumulation to then distribution to create new supply. So that's why we see highs rated over here for price to create new supply and then move to the downside. So let's play out a few candles and look for another short entry. Price comes up all the way into that area of supply. Look exactly what happened again. 1, 2, 3. Okay. Watch what happens after. Break a structure to the downside. There's your range break. We'll play out a few more candles. There is that break of the, we'll play out one more. Break of this zone right here. You now have that double break of structure. I'll talk about why I chose this candle as well. Here's your first internal break. You could call this the change of character, right? Second, right here. There's that break of structure to the downside. I have a lower time frame accumulation to then distribution. I can look to take this into. Now that price comes into that area, it's rating highs. I now have an area to short and now target this liquidity goal to the downside. So my first target will be these lows right here. And then the second will be that overall lows we were looking for over here. I'm looking for price to do something like this. Come down into these lows. Take out all of these lows here, reaccumulate, and start to move higher overall. Show that reaccumulation from a higher time frame distribution to then accumulation as we come back into areas of discount, back into areas of demand that had caused this new internal high right here. But we can't call it yet until that structure shows itself. But we had that area we could have looked short now on that break of structure to the downside. And then what do we see following? Now that it's in supply, there you get your drop. So now I have two areas I could have looked to play at this point in time. Unfortunately, I wasn't at the office when this was going on when I was looking for these trades. But we got this move to the upside, double break of structure to the downside. That's now presented. You now have a long entry to then short entry. And now you can start to see why people are looking for those certain areas. Why I can sit here and say, this is my long entry. Right, I'm taking it to this area. Draw it up like this. Right, I caught a 7-to-1, and then now I'm in shorts at my literal take profit. And where can I TP? My old entry. There you go. Look at that. And it gets into these situations where it seems like you catch every single move, right? When all you are doing is just focusing on that higher time frame structure, waiting for areas to get in, and then following, watching the reactions at your zones, right? We talked about the zone back here. Price reacted well off of that zone. It gave that demand candle, came back into that area, made him higher move into supply. This was the most recent high that caused this recent low right here. And structure was overall bearish. So we were looking for this to be respected. If it wasn't respected, we could have looked for more demand. But instead, it was respected. Double break of structure was presented. Area of supply was presented. And then we saw the move to the downside. So we now have two profitable trades within 2 sessions. Right, this one hit 145 that we could have looked to take. And that's it. That's literally it every single day. This is why I'm only focusing on 1 to 2 to 3 pairs. Because if you do the same, you'll start to see all of these opportunities start to present themselves. And now you're working on longs, you're working on shorts, and you're not just only looking for shorts on 14 different charts, right? Or only looking for longs on 20 different charts, because that's only going to discourage you at the end of the day when you start to get manipulated out of situations, out of certain charts that you're not used to. You're not used to that behavior, how they move, when they move, right? We talk about Forex pairs at certain times as well. So it's very, very, very important to limit yourself. Limit yourself to the amount of hours that you're trading, the amount of hours that you're at the chart. Limit yourself to the pairs that you're trading. and just start to limit yourself to taking only high value setups, only that follow every single one of your rules. So now I want to go ahead and do a little higher time frame analysis on her. You can see we had that move up into supply, and then we had a large move to the downside. Still looking for these Monday lows to be taken out right here. Possibly even these lows here come down, fill this fair value gap more. Finally fill the 50% of that. And then once we do, we'll see that move to the upside. This is one area I will be looking at a point of interest after we run these lows. If we can see a break of structure to the upside on the hourly chart with impulse, and then the 15-minute chart showing the same exact behavior once it comes down into that hourly demand candle, then I'll look to take trades to the upside. But right now it's looking like downside into these Monday lows. Wednesday and Thursday are going to hold the possible midweek reversal that I'm looking for. We have PPI tomorrow, and then we have CPI on Thursday as well. So these could definitely be catalysts for these moves once they come into play. We could wait for the news to come out if we wanted to wait for the actual entire move to come out instead of trying to time that bottom or time that top like we were talking about over here with this trade. Or we can look for it as it comes into play. But personally, I'm probably going to be calling these out once they come into play. I'm still waiting on these longs, man. Once they come out, then I'll be good to go as far as that goes. Entries and exits will be posted. So we do have about 15 minutes. I haven't even gotten into US 30 yet or ETH yet. I just wanted to give you guys that quick lesson on all of the opportunities that can come into play within a singular move. All of the opportunities that can come into play after the confirmation. We talked about 3 trades that were available after the full confirmation. Then we talked about 3 trades up here as well. There's a trade up here as well. So we had probably 6 or 7 entries on this move to the downside right here, still following our rules, still utilizing patience. Instead of trying to time the top over here, time the top right here, or time the top right here, right? Because we all talked about this reaccumulation as well. But I'm going to go ahead and get into US 30 now. Get rid of this. We'll go into US 30. We'll talk about what I'm looking for overall and why I'm looking for it. So on the weekly chart, just to show you guys this zone that I'm looking for, this is the institutional candle. The reason I'm choosing this institutional candle is that the candle before the candle that broke structure to the upside right here, even this area of demand, we could use that as well. But this is a weekly chart, so on higher time frames, usually weekly or daily charts, I'd like to see price come deep into those areas and not just bounce once off of them. That just shows me it's possible inducement. But come down, fill the 50%, get all of these algos orders filled, and then possibly see a move up into this area of supply. This is something I had drawn out too. Price comes down to here, comes up into this area of supply, this drop base drop, creates some more equal highs, comes down one more time. We talk about the manipulation of zones before we look to take them. Price manipulates that zone to the downside, and then we look for the break of structure, and then we'll start to take it to the upside following that. But if this is not shown, then we won't look to play that, right? So we'll go on lower time frames. We have another accumulation and then a possible distribution coming into play. I was looking for price to accumulate and then distribute, taking out these lows right here, create some equal lows, take out the equal lows just before the zone. Then we'll wait for the break of structure to the upside once, twice. We can look to take the demand candle or the fair value gap that presents itself, and then we can start to take it higher into premium of this high that had caused this low right here, which is also that weekly supply candle that we were talking about. All right, so now that that has occurred, as far as US 30 goes, it's pretty clear, pretty simple. We had a 4-hour break of structure to the downside. We had one large candle to the upside. People are going to think this is a demand zone, create some more equal lows as we're coming up into these areas, manipulating highs. We'll look for the break of structure downside. Once that is given, we'll look for that area of supply, taking it lower into this low right here and into that area of demand. US 30 is pretty clean. I really do like this chart. I really like how it plays. NOS is very similar as well. Very similar story. It did actually already take out the weekly low, but it can come down and take this other one out as well. We'll go to the left here. these lows right here, looking for price to mitigate somewhere around here, and then start to make its move up into supply right here. This could definitely be a 2 to 3 month chop. Some people were saying wait after midterms as far as when that bottom comes into play. But when that bottom comes into play, we'll be able to know. We'll be able to see it. We'll see that daily break of structure to the upside with impulse. That'll start to give in our weekly pullback. We can then look for trades as far as that goes. But I want to go ahead and take a look at ETH now. We were talking about ETH for a couple months now, coming into these lows. Right here, this 2-day fair value gap, just to show you guys what I was looking at. This one right here, you can see the 1, 2, 3 move to the upside as well, broke internal highs, closed over these internal highs on the 2-day chart. And then we created a lot of long liquidity we were talking about as well at these areas. But look what we're leaving behind. This is what's very, very, very important. We're maintaining discount of these swing moves, and we're starting to constantly leave equal highs on higher time frames. This is a 2-day chart. Okay, as we're coming into these areas, this is exactly what we want to see into areas of demand or into areas of supply. Within supply, we want to see the equal highs just before, right? We see the equal highs manipulation, and then we see the break of structure. Now we have an available trade. We'll look for the equal highs, the manipulation of the lows into this area, and then we'll look for that break of structure to the upside. And then now these highs are going to be the reason that price starts to move to the upside. Retail could 100% be shorting this to the downside right here. Maybe they think it's a bear flag. Maybe they're going to short this retest. They're going to give them that little move. They're going to get excited, think it's taking out these lows right here, start to add more to their positions. They start to look left and they go, oh, ETH to 600, right? ETH to 500, ETH to 300, whatever they're looking for. So they start to short. They put their stop losses at these highs, these highs, these highs, this high, and this high, right? When all we are seeing is an internal low that caused an internal high, strong low. If that strong low is held, we can see this high taken out. That's as simple as it is. Within discount of the literal higher time frame scale, from, you could call it from this low to this high right here within discount, this low to this high here within discount, this high to this low here within discount, right? We're starting to constantly maintain that discount and create that buy side liquidity, which is very, very prominent at your levels that you want to see. 100%. That's the behavior that you want to see as you're coming into these levels. So once we get down to this area, this 1156 area, if we show a 4-hour even or a daily break of structure to the upside, again, I'll be looking for those long trades to the upside once that comes into play. We can show Bitcoin as well. Bitcoin, I was looking for a move up into supply and then a continuation to the downside. But did it respect supply? No, it did not. Instead, it just created new supply and it started to move to the downside. I personally think this demand zone gets taken out. I think we just run right through it and continue to the downside into our liquidity goal that we've been talking about for about 2.5 months now, 3 months. Once we first had this move up here, I mean, the monthly chart was clear as day, right? Those monthly equal lows that we had. People are looking at institutional candles saying 12K BTC, but I could 100% see price not give that. Price just take out these lows right here, fill this fair value gap, and then start to make its monthly pullback after into areas of supply, and then we'll look to take it to the downside if it is given to us overall. But with these charts, with especially Bitcoin and ETH, this range has been super, super choppy. I've been super, super patient on trading these coins. Once that structure presents itself, especially with altcoins as well, because when I was trading altcoins, I would always look to trade altcoins after I got a 4-hour or daily break of structure to the upside or the downside with Bitcoin and ETH. Because as we know, most alts are going to move with Bitcoin and ETH. That's just how the domination works, because Bitcoin dominates, I believe it's like 58% of the market. It could be more, could be less. I'm not 100% sure. That was just off the top of my head. But we all know and understand that Bitcoin and ETH dominate the market, right? So once Bitcoin and ETH finally show that move, then I'm looking at alts. I'm looking at those higher time frame alt setups because now it's interesting to me. I don't want to get into alt setups that just don't have any liquidity in them because there's simply just no money. Nobody's trading those coins, right? You saw Longway just absolutely killing XRP because that has volume in it. XRP is moving because it has volume in it, right? If you're trading coins with no volume, then you're not going to get what you want to see. You're going to get slow grinds. You're going to get long grinds into your areas, into your zones. They might not respect your zones, right? This is very similar to meme coins because someone can throw $1 million in there and move the price up 20%. That's not going to go exactly with your strategy when you're looking to play these charts, right? So I wait till Bitcoin and ETH show that higher time frame setup to me, and then after that happens, then I go to look for alts. I go to look for top 10s, alts with a lot of money in them, and I can look to trade those and profit off of those because now Bitcoin and ETH have shown their higher time frame scale. I can see a break of structure to the upside. Then I can go on my altcoins and look for those areas of demand, right? Because we all know as crypto moves, it's all very similar. It's all very similar. So with that being said, we got about 5 minutes left here. I wanted to leave this open to any questions or anything like that that you guys had. If you have some charts that you want me to look at as well before we go ahead and end it here, I can 100% do that. This was recorded. It will be posted to YouTube following for any of you guys who missed or want to go ahead and go back and watch again. But the main lesson, the main moral of today was to wait for that continuation. Just remain patient. Wait for those high value setups to come into play. If you miss a high value setup, you miss a high value setup. There's multiple opportunities every single day at the same times, right? So I don't think I see any questions or anything like that, which is completely fine. What's up? What's up? What's up, brother? What's up? No, you're good, man. Yes, sir. Okay. Right. Right. Okay. Personally, same. Back into those areas for sure, for sure. Within this area, personally, on an hourly or 15-minute chart, I love that, dude. I love that. That's exactly what I was looking at as well. I want this fair value gap to get filled down here. There's 50%. Take out these lows, get a bunch of people into shorts, and then move from there. But these are definitely both points of interest. But as far as what I'm looking for, I'll look for a move like this, bring in that fair value gap, and then instead of playing the entire fair value gap, putting stops underneath these lows, I personally like to play the supply or demand within. Meaning once it comes into that area, I wait for a break of structure to the upside on the time frame given. Like for this one, for instance, it was a 4-hour fair value gap here. This candle made this 4-hour fair value gap. It came into that. So what calls my higher low is going to be an hourly break of structure to the upside. So once it comes into here, I wait for the hourly to show that break is structured to the upside. It breaks to the upside. I can play the candle before, and I now have that entry that precedes itself, and I'm now still holding for that higher time frame scale, even though I entered on an hourly chart or a 15-minute chart, if that makes sense. I don't know if you play fair value gaps or not, but this is how I look to play them when I get those large moves like that. Right, right, exactly. Yeah, I wait till it's obvious. Wait till it's just very, very obvious that price wants to move in a certain direction, and then I have those entries that present themselves after. So what I would want to see on a move like this would be an accumulation to distribution. So we take out some highs, come in and fill this fair value gap a little bit more. I wait for a break of structure to the downside. I'll take entries right here. I'll look to target lows, lower into these areas, and then I want to see price creating clean highs and lows as it's coming down. Once it does, I'll wait for that hourly or that 4 hour to then switch again, show exactly what it showed right here, and then I'll wait for this to happen again. So once it starts to pull back on the lower time frames, I'll wait for that break of structure, and then I'll enter and then hold for that higher time frame scale as far as it goes. But it's the same thing pretty much I'm looking for every single time at areas of interest, at my points of interest. I want to see price creating reason to come up, showing that it wants to come up, and then I'll enter my trade on that confirmation. Right. 100%. 100%. 100%. Yeah, I want to see a little accumulation on lower time frames here. Price to take out some of these shorts after this long move or this large candle to the downside. That's going to get people to try to long again. Maybe they think this low caused this high, so they'll try to take it to these highs. Whatever it is, they set their stop losses at these lows. And then once we get that break of structure, we now have that area that we can look to short it into those lows here and then lower into these lows here. And then into our area of interest as far as that goes. But yeah, a little accumulation and then distribution. Same thing we saw here pretty much, but on a lower time frame scale. So it comes up, breaks down, and then we'll look to enter on areas over here. But yes, sir. Is there any other questions or anything like that anybody had before I go ahead and end the stream here? If not, completely fine. Like I said, this was recorded and will be posted. If you guys had questions that you either didn't think of now, want to ask me later, you guys can as well. I'm gonna go ahead and check my mentions. Got you, brother. Silent said if we hit the BTC daily fair value gap before 17.5, would that give you an overall bias of down past the 17.5 lows? So we'll go to Bitcoin. And I'm assuming this daily fair value, is this a daily fair value gap that you're talking about, Silent? Or is it lower? The one above, this one here? 25, this one here. Okay, this fair value gap right here. I believe we filled that. Yeah, we filled that. We came down into it. I personally consider this already filled and done with, over and done with. That makes sense to you. In the range right now, okay. Daily fair value gap. This one? This one up here. Okay, perfect. Okay, perfect. I was looking actually for price to come into this area of interest and create an accumulation to the distribution, but instead we just took the highs of this internal range. We still held this high that caused this low, and we're starting to see breaks of structures to the downside. So I'm not too I would say lenient on price coming up into these areas first. It would have to break structure to the upside on H4 with impulse for it to come into these areas. But right now you can see we're just violating demand. I think it's going to be a slow grind down into these lows, which is going to be perfect what we're looking for price to come up. And it could definitely go past those 17.5 lows, decide to fill lower if it wants to. But we're looking for that liquidity rate and then that break of structure to the upside following. I hope that helped out, if that made sense. Perfect. Sounds good. What's up, brother? I'm looking for lower, man. That's how it is, personally. I think you're looking in this wick. This wick here. Perfect. I love it. I agree. I think it's a valid zone because I personally think we just lick these lows and then make the move. The 3 hour zone. Yeah, I'm peeping it right now. Yeah, that's perfect. I like that. I like that. I don't necessarily, I couldn't call below 15.6 honestly until it happened, because we'd have to show some accumulation to distribution, some type of supply within that area, to continue to the downside. But I really do like this POI, man, because I'm personally looking for it to just raid these lows and then make the move upside. When you found the actual POI within this candle right here, which is right here with this liquidity as well, so I definitely could see that area being induced. I think you had a 3 hour chart. This accumulation. Yeah, I like this. Right before the zone. Yeah, I do like this. That was the lows that I had here. This candle. Yeah, this was the break here. Second break came over here, and you can see we already filled that right here with this move. Yeah, yeah. So this is what, 17.2? I think you have that as well. We'll drag it out. Drag it out all the way. We'll see what happens when we get into that zone. I'm not too worried about the zone because I'm gonna wait for price to create new demand anyway once it comes in. But after we raid those lows, then I'll look for that daily breaker structure to the upside. Call the weekly pullback. Then the weekly should pull back to these areas right here. Yeah, least premium 29.3, and then on that move as well, that'll call monthly breaker structure. So we could even see price come higher after that. If we take out these highs right here, because this is the monthly high that caused a monthly low. So if we take that monthly high out, we could definitely see price start to make that move to the upside. But yeah, I do like it. I really do like it. Well drawn up, brother. All right. But that was pretty much all I had for you guys today. Again, if there's any questions or anything like that that I missed, feel free to just at me in chat or anything like that. This was recorded, will be posted to YouTube after. Thank you guys again for showing up, showing that you're trying to learn, showing that you're trying to profit in this market while everyone else is trying to figure out direction. Right. So with that being said, thanks again, guys. Thanks for popping out on this night. I will see you guys Thursday. Very excited. And those gold entries and exits will be posted. Gold is going to be my biggest focus for this week, coming into PPI and CPI Wednesday and Thursday. So with that being said, thanks again. And I will catch you all later, guys. Peace out.